Well, good evening, ladies and gentlemen, and thank you for being with me this evening. It's going to be good morning, actually, to our friends in the Sunshine State of Queensland, and good afternoon to the rest of Australia and our friends across the ditch in New Zealand. How's the volume, folks? Would someone kindly type in the questions box? Just let me know that you can hear me all right. No, we're having troubles, are we? Stand by. We'll just check this audio. Oh no, it's just hit the panes right now. Vicky was the first one in, one of our very few but so welcome lady traders. Vicky, welcome to you. Thank you for your response. Andrew's with us. Volume's good, he says. John's with us. David across in New Zealand in the shaky Isles. In fact, not so much the shaky Isles as the very wet Isles. They've been having a terrible time in New Zealand. Landslips and endless rain, terrible. Monty's with us. Good, Monty. I hope we got that issue fixed up for you. If not, send me another email. We'll get Terry onto it. Greg Palladini's with us over in sunny California, but not so sunny at the moment, probably. Janet's with us. My God, talk about a voice from the past. Janet Janet's been with us for years and years and years. One of our pretty close to original Danielcode clients, and she's done at least two, perhaps three tutorials. So Janet's wonderful to see you back with us. That's a real thrill. Good. Well, I got so much to talk to you about, folks, and I'm so glad all of you are able to be here with us, and we have a very loyal following. It's fantastic. So today I'm going to sort of wrap up for you and fill in the missing links about our time analysis that I've been talking about in the last two or even three of our webinars. And you must be heartily sick of it by now, but I'm not. I continue to be amazed by the way these markets perform. And what I'm really trying to tell you here with these major cycles that we're looking at is just how incredibly orderly markets are. And some of this stuff is absolutely magical. I don't use the word magical lightly. I mean, it's incredible. I've been doing this stuff since, here's Janet, since 2011 she's been with us. Oh, bless you. I hope your health's all right, Janet. You're having a few troubles last time that we talked. I've been doing this stuff for going on 30 years now, I guess. In fact, I haven't done much else for the last 30 years except be obsessed by trading. And I am obsessed. But I promise you, no one is more amazed by this stuff than I am. And that's why it has such a hold on me. That the more you look at these charts, the more you think, the more you see. And the curve, as far as I can tell, is endless. It's quite marvelous. And it's so good to have so many of our terrifically loyal Danielcode clients with us because it's heartening. It's rewarding to know that we've been able to show you something, maybe teach you something, and to have people with it as well, like Greg Palladini, who's a successful, very good trader and a successful wealth manager in his own right in California. And he's done us a marvelous service. Anyone, if you hadn't been to the website for a while, I do urge you to go and have a look at Greg Palladini's posts about the Danielcode trading tutorial. I'm sure Greg won't mind if I tell you a little bit about him, because he's been with us for so long and he's been so generous in helping so many people with his posts of what he experienced at the Danielcode tutorial. Greg, off the top of my head, I think came to a Danielcode tutorial. I think he became a member in 2015. I think he did a tutorial in LA in 2016, a live tutorial. And he came back last year with primarily interested in learning to trade time, which I wasn't teaching when he did his previous tutorial. And at that stage, it might even have been more than a year ago now, Greg. Hey, Tony D has arrived. Mild Chicago winter. Good for you, mate. Lovely to see you, Tony. You're another long-serving follower of the Danielcode. Tony's a broker in Chicago. Lovely guy. Many years since I've met him. In fact, too many years since I've been to the States. I'm well and truly overdue for more than one trip, I can tell you. So when Greg came to me this time for his tutorial, he was actually a Forex trader, and he's now a futures trader, maybe as well as, I don't know, but certainly since he saw what the Danielcode can deliver, which he's learned at his Danielcode tutorial, he has become a very, very good futures trader now. Let me say this. The generosity of Greg to allow us to use his full name and his generosity in posting at length under the Danielcode forum. He's got his own thread there called Danielcode Trading Tutorial or something close to that. The generosity of allowing us to share his thoughts and his achievements and his insights as a very knowledgeable trader before he even did the tutorial. I mean, that is such a gift to new members and guests. I do urge you, if you do nothing else, go and, lol, you're quite right, mates, but it's true. What did he say? Summer of 2021 when I did the time tutorial. Yeah, time flies, doesn't it? I'll tell you a secret, mate. The older you get, the faster it flies. 21, yeah. But if you do nothing else, for goodness sakes, do go and have a free trial of the Danielcode. If you do nothing else, go to forum and go through Greg Palladini's post on his experience of doing his second Danielcode tutorial, this one specifically with the intention of learning time. But of course, once you understand time, everything else wraps around it as well, and it all falls into place. So today I want to show you a few of the missing links. So some of this stuff you will have already seen at our previous webinars, but it's all worth going over more than once. And as you know, markets are rational, orderly, and sometimes predictable. We've got a good roll up today, guys. Well done. We have a lot of our old friends have appeared again. Wonderful. So if we're talking about trading time, the last frontier, I call it, there's very, very little literature on trading time. I don't know who else does it. I don't know how many people do it. Certainly nobody does it the Danielcode way except Danielcode clients. But trading time is often looked down on by the learned members of our business. And really, the smarties who say it can't be done, that's really code for I don't know how to do it, so I assume it can't be done. And that attitude, excuse me, is a great failing of human nature. But trading time should be one of the most normal things for you to do because we use, there are no magical time cycles in here. You know what the Danielcode time cycles are. We use on top of that daily, weekly or monthly charts. We use daily charts. We use 6-day charts. That's the Danielcode version of weekly. We use 24-day charts. That's the Danielcode version of a monthly chart. Most months are 22 trading days, close enough. And one day is simply one rotation of the Earth around its own axis. It's nothing that I invented. This was all created far above my pay grade. But since time is so certain, we should be able to divide the time circles with the cycles with a high degree of accuracy. And we do that, and that's what you're going to see today and what you have been seeing over the many years that I've been showing you these trades, because even from our basic TO3 signals, which was the first product that we had way back when the Danielcode website went public in late 2007. The TO3 signals have an element of time in them. The TO3 plus signals in our blue line trades have elements of time in them. So we have always used time in our signals, and you've seen how successful they are. So very briefly, because some of you have already done this at your last webinar or more, the source code from Daniel comes from a historic document that is a short story, really. It's only 15 lines about time, and it's specifically about time. And it gives us two numbers, 1335 and 1290 days. It's in days. And with some basic math, we get 29.6 days, which we say is a measurement of time. It's not the only measure, but anytime you're dealing with an historic document, you've got to have some verification that it's real. Now, I'm an attorney. I haven't practiced the law for many years, but worse, I guess, than being an attorney, I'm an old attorney, and that means I'm cynical, very cynical. If I can't prove it, I probably won't believe it. Sometimes I may accept your arguments if they're strong enough, but basically with me, seeing is believing. So I don't show you anything that I can't prove to you. There's lots of other stuff in here that is also quite magical. But what I show you here, these webinars, it's something I know is true because I can prove it, and I let you have the information so you can prove it for yourself. So we have from our period of time, which is 29.6. Now remember, we can verify that externally because a synodic month, which is actually the average length of a calendar month, is 29.5 days. In the same way, we can verify from these numbers. We will create 365 point something or other days, which is very, very close to a true calendar year. And in fact, the Danielcode version of a calendar year is within 2 hours of a true calendar year. Remember, this stuff was written in about 600 BC. And here we are with all our modern science, atomic clocks and every other timing mechanism you can think of. We can absolutely verify these things to within 0.1. And on charts, that converts to a handful of ticks or less. It's amazing stuff. So this little article in the source code tells us how time progresses. It is time times and a half. That's how markets move. And by sequencing the square roots, which certainly the ancients knew how to do, we get 6.21 days, which is minor time. And that's all there is about time. That's it. That's all you need to know, because that's all there is at the moment. I may have some other insights in the years to come, but what we've got now is pretty fantastic. So don't forget, when we're doing this work, we're splitting days. We're taking 365.37 days, proper calendar year, and we're spreading it over 251 trading days, which we lose 31.7, almost 32% of our data through weekends and market holidays, which I have to say, while I'm still grumbling about it, I do hate these market holidays. They annoy the hell out of me, particularly the little stub markets that trade electronically and make a mess of your charts. I should say, incidentally, on that subject, that for the last couple of years, we've been trading after a market holiday, but we ran into just so many problems with the website because it's designed to not work on the day after a market holiday. It needs a full day's trading to reset the charts and reset the website data. So we've gone back to that idea now, and it's not a problem. I mean, there's 255 trading days in a year. If we have to stand aside for one or two, that's fine. But you can make this stuff more precise if you look at the crypto charts, because they trade weekends. But you don't need to. So markets are essentially an expression of human emotion. But how they can adapt to losing 31, nearly 32% of their trading days and still be as accurate they are pretty well to the bar on the daily charts, on the 6-day charts, the 12-day charts, the 24-day chart. I mean, it's amazing to me. It's magical, and it should be to you as well. And if it's not, think a little bit more, because I think it really is something quite extraordinary. So remember, inside bars and outside bars are disruptions or flow interruptions, as I call it, and all of those issues are signposts to future time cycles. I'm going to show you that specifically today as we go along, and show you the missing links that will tie all this together. So here we are. David, anyone else having a problem with sound? Maybe it's woken up here. No woke here. Fixed, David. Thanks for letting us know. And it obviously fixed itself. I'm an awful long way away from most of you folks. I'm in Queensland, Australia, where the Sunshine State. I've got to say, it is a beautiful day, as usual. And sometimes these internet do take a while to get there. I had some problems with my internet a few years ago, and I eventually got a technician who tracked down it all, and there were 257 leaps between my computer and Trade Navigator in Colorado Springs. So the internet is a great marvel, but like most things in life, it's not perfect, but it's very, very good. So we're obsessed with market turns, and there's a reason for that. Every trend starts with a market turn, and every trend ends with a market turn. And with the Daniel Code, when you get to understand it, markets are talking to you every day. They're literally telling you what they're doing and what time cycle they're following. And before the Daniel Code, we didn't have the language to understand that. Now we do. And they tell you specifically which price levels they are tracking. And for this, we use the Daniel Code time ratios, which is what we get from the source code. And we simply use them as price targets. Now, might sound ludicrous, but we simply take known time cycles and we put them on charts as price targets. And it works. And it works a treat, and it works a dream. If you go to the chart archives at our website, there are over 40,000 charts there that I've created for members since we went public in late 2007. And honestly, you will be stretched to find a market that's ever turned anywhere except with Daniel Code target recognition. Now, remember, target recognition can sometimes happen a day or two before the high. Target recognition is valid for at least 2 days, sometimes 3 days. And remember, that target recognition is the most effective filter for all of your trades. So anytime you know something that the rest of the world, the trading world, doesn't, you have an immense and huge advantage, and you know about time. And I can teach you everything that you would ever want to know about time. And it's worth learning because it's sensational. This is gold. This is from March 2020, a little bit before, as much as I could scrunch up on the chart. And these are just our simple, basic 49 time cycles. No fiddling, nothing fancy. Put them on the chart. Every significant chart, every significant turn in the market gets turned and shown at a Daniel Code time cycle. This one's the 49 time cycle, our most basic time cycle, and where it expires, it creates signals, and you can see them on this chart. So let's talk a little bit about the philosophy of trading futures and Forex. Now, there are all sorts of reasons for trading futures and Forex, but my view is that futures and Forex markets exist simply to transfer wealth from the great unwashed to those who know how to trade. And winning with Daniel Code trading is easy by understanding market structure and the incompetence of the vast majority of traders. I mean, the things that traders do, it's hard to believe that they are so unappreciative of the value of money. But there is so much stupidity that goes on. There's so much misplaced emotion that goes on in futures and forex market. If you know anything at all, and you do, you're 100 miles ahead, because the average trader doesn't know, but they just plow in and trade anyway. It's scary for them because they're going to be perpetual losers. And we've learned some really interesting lessons lately. 2022 taught us that hedge funds don't hedge. And by that, if you go to Morningstar, or is it Morningside, someone will correct me, they publish all the records of all of the hedge funds, their trading results. And 2022, where there was really decent volatility, it wasn't certainly sensational volatility, but there was good volatility, very few of them, and I mean very few of them, had any result at all. Citadel were the outstanding example, but they've got both sides of the market, because don't forget they're seeing a vast majority of the retail trades before the rest of the world. But hedge funds, dreadful performance in 2022. And 2023 is teaching us that options traders can't identify immediate trend. My favorite trading publication, or it was before they put most of it behind a paywall, Zero Hedge, is a website. Very, very clever people, and they're options traders, and they're dedicated to options. But the moaning, the crying in 2023, I mean, the market's going two ways, and sometimes it's going two different ways in 2 days. They can't fathom it. They can't understand it. They certainly can't trade it. And they call it the pain option, the pain trade. And there's been a lot of that for people who don't know how to trade. And if you can't tell trend from the last bar with a high degree of probability, then you are probably tied to the pain trade. Now, that is not as drastic as it seems. Let me tell you perhaps again the story of 3 young men who are working on rebuilding one of the beautiful resorts up in the Whitsunday Islands, up on the northeast coast of Queensland. They are one of the 7. The Barrier Reef itself is one of the 7 wonders of the world with UNESCO, but the islands themselves, they are just magnificent. They are beautiful. They are sensational. It's some of the best sailing water you're ever going to see in your life. It's fantastic. I love it. As a young man, or a younger man, I spent 7 months up there at one stage on a boat. And I guess if I hadn't come back when I did, I'd still be up there. It really is about the closest thing to paradise that I've ever seen. But anyway, I digress, as I sometimes do, and you'll forgive me. These 3 young men were tradies. They were working on rebuilding one of the buildings on one of these beautiful holiday islands in the Whitsundays. And what they did in their time off is they got in their tinny, which is an aluminium dinghy, if you like, maybe anywhere from about 12 up to about 18 feet in length, with an outboard motor on it, and they went out into the beautiful Barrier Reef waters fishing, because the fish up there are extraordinary, beautiful, beautiful fish. And they were out there one day, and a chap went past them in a great big cruiser doing about 30 knots, and the wake from that just tipped over the tinny. Well, he didn't even look around. He was looking at much more interesting things in the company who were on the boat accompanying him. So these 3 guys, their little dinghy got swamped and then tipped over, and they were in the water. And that didn't panic them too much. They were been following the latest bulletins from the water police, and the Department of Transport keeps stressing, wear your life raft, wear your life jacket. So they had their life jackets on, and they're floating around in the water. It's beautiful water there. It's warm, it's lovely, it's magnificent, and clear. And they're happy enough, and they can see they're surrounded by islands not too far away. They can swim to the nearest island. So they start off quite leisurely, swimming towards the island that they could see, which was in the Whitsundays. It's actually Whitsunday Island right there where they were. And all went well until one of the guys looked around and saw a shark fin. And then he yelled out, shark, and then there was panic. And the 3 of them were thrashing, fighting their way to the island, trying to just swim as fast as they can to make sure they were the first person on land to avoid the shark. Well, the moral of the story for traders is that you don't need to be the first person on land. You simply have to beat one other person because the shark will take the hindmost. And it's like that with telling trend. You may think it's nearly impossible. It's not. We do it every day. And you don't have to be right because if you've got the call on trend incorrect, it only affects how you manage your stops, which particular stop loss you'd use. It doesn't affect whether you take the trade or not because we never ignore a time signal. And you can learn this stuff. I teach it. You can be trained. And I've always said to my children who've gone through many, many years of university, my daughter, Bodhi, is in final year medicine down in Sydney, but she got her PhD in philosophy, a doctor of philosophy, PhD in psychology when she was 26 or 27, and she has a Bachelor of Degrees in psychology with first-class honours. My son John has a Bachelor of Film and Television from Bond University up here in Queensland, and he has a Bachelor of Psychology from Southern Cross University, also in Queensland. So you can see for my children, at least, a large part of their lives, their younger lives, was spent doing exams. And I always would say to them, trained or untrained, if you've done the work, if you know this stuff, then exams are just an opportunity for you to show your examiners how well you've learned. If you're untrained, nothing's going to help you. And unfortunately, there's an awful lot of untrained traders in the world, and they don't need to be untrained. I teach you. So why should you be interested in the 2000, 2007 highs and subsequent lows, which I've been bashing to bits for the last couple of months? Well, this is why. These are some recent trades in the Russell. These trades come from understanding time. Most of these trades are TO3, TO3 plus, and blue line signals. They all have an element of time in them. So you can see here recently in the Russell, it's nothing sensational. There's no super big bars in there, but that's a pretty easy $6,500 just by understanding the Danielcode signals. And more than that, it allows us to create something like this. These are Danielcode time signals, and they're different to what you've seen before, subtly different, I should say. But these have come from flow interruptions. In other words, instead of starting from apogees or perigees or new moons or full moons or lunar cycles, I've simply taken interruptions in the data flow. In other words, some inside bars, all outside bars, and gaps. And this is what it's created. Pretty nice trading, isn't it? You have to understand the failure points. You have to have some risk management. That's because I put a filter on it, but I'm going to show you the raw result where pretty well one order replaces the other. So I just wanted to show you this little bit of chart here while it was still in my mind, and this is, I call this the tough stuff. This was a consolidation that went around about December last year, and it was nasty. I hate consolidations. The only time you'll actually consistently lose money with the Danielcode is during consolidations. So if you're going to be neurotic about anything, and most traders are neurotic to one degree or the other, be neurotic about consolidations. If you suspect the market is consolidating, either go to safety mode or simply stand aside. A huge part of market success that's not talked about enough is market selection. You must trade markets that are active, markets that are moving, markets that are dead and dormant, and all markets go through consolidation phases. Don't be there, be somewhere else. Most of you know I always encourage you to trade more than one market. That way, should one market be consolidating, you won't be hurt too badly because you one or two others or more perhaps will be doing well. But this little piece of market through here, we had a buy signal that switched into a sell signal, and it failed pretty much one bar afterwards. And if you watch our previous webinar, which was called Correcting GAN, you'll see I showed you how to use speed bars as a really simple way of telling when markets are succeeding in their move, where they're weakening, and when they're failing. So right here you had a buy and a sell that essentially failed one after the other. When both buy and sell trades fail, you are likely in a consolidation. Now, this is a little tip for you. If you think you're in a consolidation and you're still trading, ignore inside bars. Don't enter at the highs or lows of inside bars. Use tutorial, folks. If the inside bar is anywhere near 50% of the previous bar, simply trade the last bar that was not an inside bar. But trading inside bars through this pattern here got you wrong. If you just left your stop where it was from the last buy signal, it took you right through it. It wasn't pleasant, but it did the job. Okay, let's move on. So today I got a missive, I should say, from Glenn Larson at Trade Navigator. And those of you who have Trade Navigator got this as well. And Glenn's a lovely chap. He's the owner of Trade Navigator. I've been using his product, Trade Navigator, for many, many years. I'm a partner at Trade Navigator, which means I recommend the Trade Navigator's data and their software package, which I do. I think they're very good people. Reading this missive from Glenn, it occurred to me that he's showing a caring and compassionate side. And I'm also a compassionate and caring person, but a little bit differently to Glenn. He's giving you some solutions if you've been losing in your trading. I'm a whole lot more aggressive than that. I don't understand losing in trading. Last month, the Australian Future Fund, which is a massive government-funded trading portfolio that was set up because the budget's incapable of paying all these grandiose retirement benefits to our federal public servants. If you want to see a fat cat, see an Australian federal public servant. The benefits they've been getting, some of the retirement deals that have been done, they're unsustainable, quite simply. And to try and soften the blow a bit, many years ago, the Australian federal government invested a huge amount of taxpayers' money in a fund to be traded in investments and stock markets, etc., in the belief that they could soften the blow, get some return at least, and soften the blow of these continual payouts as superannuated public servants get their retirement packages. So the commentary on that was, well, in 2022, they lost 3.5%. But that's fine, because let's look at the 5-year frame. They did very well. Let's look at the 10-year frame. They did very well. So nobody said a word about the losses in 2022 other than simply stating them as a fact, and it was like it was just a minor inconvenience. I don't get that at all. If you are a competent trader, you should never have a losing year. In fact, I'll go further and say you should never have a losing month. Losing money at trading comes from not knowing how to trade. It's that simple. And you can see through here a whole lot of solutions of take some time off, repair your mental and emotional health. I can tell you, when I was learning to trade, there was no repairing my mental and emotional health. I hate losing trades. As long as I got the trade, if it didn't quite work out by how far the market went, that's fine. But when there's a nice market move and I don't get it, I'm furious. Even today, I'm furious. One of the best trades today finished up being the short in corn, which was staring us in the face, but I didn't post it because Monday was a holiday, and Tuesday we didn't post signals because of what I've been previously telling you. So I've got a much better idea. Don't ever have a losing year. Don't ever have a losing month. Learn to trade properly, and you never will. You will never have significant losses trading the Daniel code once you've learned and done a Daniel code tutorial. Your confidence is going to grow and grow, and to become great in any endeavor, you need to learn properly. Learn what works and ignore the rest. Now, this idea that you can teach yourself is possible. I taught myself, but I did it in a roundabout way. I spent a few years, and maybe a bit more than a few years, and pretty substantial amount of money going to seminars, tutorials, whatever you call them, of all the big names in trading all around the world. It just didn't work well enough for me. Not saying it didn't work. These are people who are publicly admired, write books, do all sorts of great things. But it didn't work well enough for what I required out of trading. And I've got a very, very tight threshold on pain. I don't like losing. And none of these various skills that I learned created sufficient level of profit, quite frankly, to give you a nice upwards curving equity curve. So I had to put everything aside and put a whole garage full of books and courses and wonderment of W.D. Gann and others, more modern guys as well, lots of the big names. Put that all into storage, and I sat and looked at a screen for 3 months. I sat there staring at a screen so long I got bone spurs on my elbows, which had to be removed surgically some years later. And eventually I started to see it. I got the first thread of the Daniel Code. But the Daniel Code is unlike any other trading system you have ever seen or heard of. It is really completely unique. Now, I recognize that market selection is a huge issue. That's a skill that should be right at the top of your list of priorities. I recognize for people that are handling massive investment funds that there are all sorts of limitations on what they can invest in. We don't have those limitations. So it might be a cheap shot to be critical, but quite simply, I don't understand how you can call yourself a trader and be a losing trader and think you're going to learn something different to pick up yourself. The probabilities are you've not. The Daniel Code has been sitting out there in public sight, has been read by literally billions of people with a B. Nobody ever got the messages from it that I've got. And that's where it comes from. I didn't invent this stuff. I read it. But if you're a complete newbie, you've never seen a futures or forex chart, that's even better. Frank D.B., who writes the commentary for the Fourth Seal, he came to me to do a tutorial in Taupo, New Zealand, where I was living at the time, in 2011. And he was a charming young man. He brought his fiancée with him, Anne. They're now married, lovely children, lovely family. And he said to me, Mr. Needham, I've never seen a financial chart. I've never read a financial article, but I enjoy your articles. I was writing a lot for Financial Sense and Forex Journal at the time. And he said, I'd like you to teach me, and I did. And that was the first year that I started teaching the Fourth Seal. Well, since then, Frank has become the world expert on the Fourth Seal, and he writes the commentary for you every week on gold, on the S&P, and on crude oil. And if you haven't seen the Fourth Seal, you should. It's absolutely amazing, and it's all about time and price. But for you traders, read the bottom line. If you're not winning, email me today. The probabilities that you will work it out for yourself are very, very limited. I can have you a winning trader in a very short time. And whatever your problem is, I promise you, I've already seen it. I've been teaching people to trade since 2004. I've seen it all. This is Frank's Fourth Seal for gold today. And the writing's a bit small for you to see. I don't have the computer skills to have made it larger, but I can read it to you that he says that final comment, gold failed to make a swing low on the 59.44.62 cluster cycle low. That is a bearish sign. Gold bottomed at the 44.5 retracement of 1827.9 so far. There's an inverted 59 cycle low now running on the 24-day chart that could give gold some support here, but the development on the 6-day chart are not bullish. The DC signals will guide us into the mixed picture here, but where the market will have to decide which chart, 6 or 24-day, that one will take control. So you should be aware of this stuff, folks. It's pretty fantastic. And he'll have 6-day, 24-day, and sometimes 12-day charts on there as well. That's a commentary on the Fourth Seal. So We've had a great 2022, and we're having just as great a time in 2023. And we've made a couple of offers to get people a bit more incentivized to get started on their Danielcode tutorial and learn how to trade properly. What we're doing now, the February offer's closed. For March, you tell me what deferred terms you need and I'll try to accommodate you. Okay, there's a link earlier to our Danielcode trading tutorial. Go to the website www.thedanielcode.com. Click on the offer for Danielcode trading tutorial. I'm still using a quote from Greg Palladini here, Greg, for which we thank you very much. He was having some pretty devilish cotton trades, pretty great stuff. Wonderful. Master trader and wealth fund manager, Greg. Lovely guys. Well, so if you haven't thought about it already, you can get a tutorial in March, and we are more than happy to come to terms with you on whatever deferred payments you need. Let me know. I'll see what I can do to accommodate you. It's my wish to teach as many people as I can. I can only teach 4 a month at a maximum, so it's not a big pool, but do get yourself into it. Now, this is reverting. This is the 2007 high in the S&P index, not the futures, the index. I've shown you this chart before, you've seen it. So we saw that we had a 59-day high to high for high to swing high period into the 2007 high, and we look for that to repeat, which is the most common thing that cycles do, and we got exactly into the swing high to the closing low on the futures chart, 59. That established 59 as a very important time cycle in this market. And 59.3 is actually the second of the Danielcode numbers after 29.6, which is the first number you will find from the source code. Have a look at this. This is the same chart here. We're now measuring high to high, low to low between the .com top in 2000, April 2000, and the 2007 high in the S&P before the lovely crash into March 2009. Lovely for us, not for stock people. Lovely for us because futures and Forex pays exactly the same going down as it does going up. And that's grand. So we've measured those high to high, low to low. This is some of the data that the market's supplying to you. Some of this stuff we use the basic Danielcode ratios. Other stuff we look up to see what the market is saying to us. And right here it's provided 2 numbers for us. 80, high to high in the S&P on the 24-day chart, 2000 to 2007. And 70, same charts, low to low, August 2002 to March 2009. 70, as you can see on this chart, has always been a Danielcode cycle. This is the Danielcode time cycle tool that a lot of you have. 44, 59, 62, 70, the most common time cycles. 70, we call it the heathen cycle. There's actually nothing heathen about it. It was actually Sir Isaac Newton's favorite number when he was analyzing a lot of this sort of stuff in a different context. And it's always been a Danielcode number. We simply call it a heathen number because it comes from a different part of the book of Daniel. You will see 70 predominantly in anything with the European flavor. The DAX, a lot of the Bunds, a lot of those German European markets, 70 is constantly recurring. And what I want to show you today was I show you the measurements we took from the futures chart. What we're now looking at is the S&P index, also a 24-day chart. And you can see there's a discrepancy. 70 low to low, yes, and we have that on the index. The high is 1 bar short, 79. Does 1 bar make any difference? Absolutely. It shouldn't, but it does. When you consider that 1/3 of the bars are not even on these charts because of weekends and holidays, they should not be accurate to the bar. Look at this. 79 tells us there's a difference. And that difference means something. Differences always mean something. Have a look at this. What we do if we simply extend the 79 straight across, nothing could be simpler. We finish up with the November 2022 low in the S&P for the year so far. Pretty amazing, isn't it? Think about that one, because if you go back one kick on that and go back to the 1.5, it's only one bar past that low that I told you was so important. That was the first of the COVID low, the COVID reactions. And then the second one was the more dramatic one. They are both equally important, and they are absolute anchors for what's happening in markets now. So here I've shown you again that 79 chart. There it is. You can see it picks up the low. And simply putting on the Daniel 59 cycle, that gives us a closing low. All of this is from the 2000.com high. You know how long ago that was, folks? 22 years. Look at it. Those cycles keep cycling, keep returning, keep asserting themselves. They become dormant they don't actually come dormant, they go underground, I think. They just are not hitting, they're not firing anything for long, long periods. This is very long. 22 years you're looking at. And then all of a sudden they assert themselves. And when they do, it's look out. So there is your 79 cycle giving you the 2022 low, and the 59 cycle giving you the closing low. We distinguish between chart highs, closing highs, chart lows, closing lows. Both are valid when you're counting time. So this is how we got to those two corrections in 2018, October, and March 2020, and I'm showing you this again. They both came from double 59 cycles, 118, twice 59 cycle, from the 2007 high and the 2009 low, and they are still vitally important for what's going on in this market. And you'll see that very shortly. So it was easy enough after we got those numbers to find the high, because we had time, and we've had times, 2 lots of 59. What was missing? And half was the last one standing. So we simply took and half of 70, and that found the January 2022 high on a 24-day chart. Have a look at the 12-day chart. All we've done here is put that 70 straight onto the 2007 high. Where'd the 70 come from? That's a market cycle. It told us that was a market cycle. If you extend it far enough, you get the 2022 low to the day, to the bar, or at least to the period. So just 2 bars around about those two very, very important swings that I've highlighted here, they gave us the high and the low in different ways. For one of them, it came on a 59 cycle from the first blue line you can see there. That's just picking up interruptions in the flow. I talked to you about that at the last webinar. Outside bars and some inside bars are interruptions to the flow, the data flow. I'm talking about, you can call it the energy flow if that means more to you. But it's real and it's measurable, and you can see simply from those 2 examples, wrapped up in those very important swings that we knew were proven to us, you get the high and you got the low straight off. Beautiful stuff. So these swings are vital. I keep stressing that. You need to be aware of them and keep looking for them. Here is more of the same thing, 2022 closing low and the cycle low. Same stuff we've been talking about. Have a look at this. We've now moved to the 12-day chart. Quite simply here, put your cycle on. This is a standard Danielcode 44 cycle. And the half, not really, it says it's half, it's actually 1.5, gives you the high perfectly. Now that high is at 66. All of you GAN traders are sitting up, your ears are flapping in the air. What's he going to say? 66 is what's called the trine, T-R-I-N-E. 33 and 66 are called the trine, T-R-I-N-E, and they are known cycles in markets. particularly in equities. The trine is very dominant in most equities, particularly the big cap stocks. Okay, there's something for you to look at, learn about, and see. Let's have a quick look at price. What have we got here? Well, when we're looking at price with the Daniel code, it's a bit different. We don't simply say that was a low and put a number on it. We put the Daniel code ratios on the various swings that could be possible, and we then see what the market's got to tell us. So what we've done here, very unusual, you probably haven't seen this done before. The December 2018 low and the March 2020 low are both vital. And what I've done is I've actually measured from the January 2022 high to the 2018 low. It's not the first low it comes to. We've gone straight through the later low to measure that number. And that's what I call swing number 1. Look where that number is. 3582.60. That's pretty much the closing low of the whole move down. Now we move to swing 2, which is the more conventional view, from the January 2022 high to the March 2020 low. Look what we've got. Swing number 2. Where's that number? It's gone off the page. Isn't that ridiculous? I don't know about this new software, but I apologize for that. You can do it yourself, and I can tell you it's 50%. The percentage is there. So this market has only retraced 50% of its whole rally from the 2020 low, which is a minuscule piece of the total bear market. And that's why I'm skeptical that correction can be enough. But anyway, it doesn't matter what I think, because we trade what's in front of us. We trade the signals. It's great to have an opinion, but it won't make you money. This is what will make you money. These are Danielcode time signals, all from a flow interruption. You've seen something similar to this, but you haven't seen this before. These are the daily signals. This is how I trade. This is how I like to trade. I want to be in the market. I believe the market exists to reward me. I believe if you know and understand markets, you can't get hurt. It's a big statement, isn't it? It's true. And you can see here, you're hard put to find a turn that hasn't come at one of our cycles. And the very, very few that have it is because they're against the apparent trend. And any trade you're in that's against the apparent trend, you will minimize your risk either by using a trailing stop, or you will exit FPC first profitable close. So bear in mind those thoughts when you work your way through this chart. It's quite extraordinary. I think it's fair to say it hasn't missed a turn. It might have missed one or two. There's a couple of areas after the end of this chart lately where it gets a bit scrubby around that consolidation. Have a look at this. This is UST bonds. We've been surging on UST bonds. We've had one good short trade after the other. And now what we had is we had a blue line and TO3 buy signal from two trading days ago, right at that number, which also, I don't think I like this new program, folks. I'll go back to the old one. It's cutting off the prices to the right, which you want to see. I can probably show them to you easily enough. It's not material anyway. It's a blue line. Have a look at members charts. It's all in members charts, and that set up a TO3 and a blue line buy, and we got yesterday's rally. Time and price were squared. This is CAD Chief today. Not a whole lot of volatility, not much excitement in the market today, other than copper had a good, nice spin, which we've been in that trade both ways for a while, and corn, as I said, had a very, very good short trade, started a couple of days ago. This is CAD Chief, Canadian dollar against the Swiss franc. Look at that TO3 buy. Look at that key reversal bar right on the black line number, 68.39. What was that low? I don't know, and you probably hate me for doing this. I love just showing you how incredibly accurate this stuff is. Now, all these charts are posted on members charts twice a week. I'm not making this up after the fact. You can go to members charts. You've all probably seen it already. That low was 68.35. Where was the Danielcode black line? I would say the real low was 68.35. Where's the Danielcode black line? 68.35. Key reversal bar at known Danielcode support. Buy it. TO3 buy. Time and price were squared. A turn is almost inevitable. What do we got next? Euro JPY. Same thing. We had a TO3 sell. It didn't quite qualify as a blue line trade, but you can see it had all the elements of a blue line trade. It had this wonderful run up, which we traded all the way up. It was great. And then on Tuesday, its high came at 144.164. The blue line is at 144.163. That is one tick. That's not even a hair. 10 ticks on this chart is not a hair. Nothing. Air. That's all. Time and price were squared. That created a TO3 sell. Not huge. Nice enough. Winning trades. You know, the Donald always talked about, will you get sick tired of winning? Well, hasn't been much winning in the political stakes for Republicans lately, but you'll get some winning if you trade Danielcode. Have a look at this. This is the S&P and why we got a buy signal for today. The market bottomed, or it may not have yet, but certainly we had target recognition on Tuesday where the close was 4,007.75 and the blue line was at 4,005.75. The red line after that it went to next, which actually created the signal, that low was a few ticks off the red line, not much, but look at the close. Target recognition is valid on the bar, high, low, or the close. The close was 4,008.50 against the close was, what are we talking about here? 4,008.50 against 4,005. That seems a bit further out than I thought. It might be the previous one I was thinking of. It was 4,007. Yeah, 2 points. That set up the buy signal for today. Not great, not exciting, but trade's a trade. We were the right way. Germany's DAX has been interesting lately, and very few of you trade it because it's I've moved one off it. It's a very, very big. Let me catch up to where I was. We've done that one and that one. It's a very big market, a huge market, but a very big margin. They've actually bought out a mini DAX now, but what I've observed, particularly in the last year, this year I should say, the DAX has been leading the S&P. Very interesting. Have a look at the DAX. Look at it beside the S&P chart. You'll see there's some significant differences there. But nice trade today. You know, easy enough. $2,000 pays the bills for a while. Copper. A nice trade up in copper. Nice trade down in copper. Look how it stops at the blue line. Pretty clever, isn't it? And that sets up a TO3 sell. It wasn't quite close enough to be a blue line sell, but it was obviously a TO3 sell. Inside bar, down today, $2,300. We made $1,400 to the upside, $4,500. Nice stuff, right? I've already seen this. If you came in late, folks, new deal for March, as long as you can start the tutorial before 17th March. I'm prepared to extend the terms of payment to suit you. So let me know what you need to make it viable, and we will certainly try to accommodate you. Okay, so it's all good news. No inflation in trading futures and Forex. Markets pay exactly the same going down as going up. For us, they do, don't they? Why would you trade anything else? Equities are going both ways, far more interesting and profitable than the one-way crawl. And drama and fiscal catastrophes are always hovering. Volatility is our friend. Bring it on. If you enjoyed this webinar, folks, go to the Danielcode website. There's much more to learn. And remember, the business of trading futures and forex is not to be right. The business of trading is making money. I spend a lot of time talking to you about market structure, about amazing turns in the market that are happening at these time cycles. The bottom line of everything is the business of trading is making money. If you're not making money, you're not doing it right. If you're not doing it right, let me know. I can fix it, whatever your problem is. And I look forward to hearing from you. If you haven't already, please take our free trial. Just click the free trial link, follow the prompts. Any problems at all, contact Terry at support@thedanielcode.com, support@thedanielcode.com. Finally, to end our session, because we're a little bit over time, but not much, this is our disclaimer. Trading futures and forex is risky. Trading derivatives is risky, and because of that leverage, it's really very, very risky. It's really easy to lose your money if you don't know what you're doing. In the same way, it's equally easy to make a whole lot of money once you do know what you're doing. So put yourself on the side of the angels, learn to trade futures and forex properly, and I will be more than happy to teach you. So that's us for today, folks. I hope there's some interesting things in there for you. Jeff, thank you, my friend, my stalwart friend, and I hope you've learned something more today, and I've given you some interesting areas to keep thinking about. That's it for the moment. Can I do a webinar on Asian equity and FX markets? Don't know much about Asian equity, Akshay, but I'll have a look for you. Certainly, we're well overdue to do a Forex webinar, which I'll be doing shortly. Juan, good. Have a wonderful weekend. You too, my friend. Great to hear from you. All the best, folks. Thank you for being with me, and good trading. It's pretty wonderful at the moment. Let's keep it that way. Bye-bye for now.